a yen strength trade. Now it's also dollar weakness, but there's a yen strength component to it. You can see where the Fed fund futures are still pricing in this rate cut way out into the future in December of 2027. And right now, and you can see this inside of the actual futures performance, gold is outperforming the S&P. Gold is outperforming bonds. We are inside of an environment right now where initial claims are falling, the 4-week average continues to fall, but inside of our, and this is a regime tracker, inside of our regime tracker, we are inside of an environment where crude oil priced in, or the S&P 500 priced in crude oil is declining actually very dramatically. And when this ratio is falling, it means energy costs are rising faster than the economy can absorb them. And when I want you to go back and look at, when the last time this happened, for most of the last, since the end of 2022, we have been in an environment where the ratio has been rising. The stock market has been growing faster than energy costs. The economy was efficiently transforming cheap energy into valuable output. That's not the case right now. And you can see the last time that this was happening here, it was going into 2021. And this is the last time that we had a very significant dollar strength environment that we were inside of. We are starting to accelerate away from those levels. And then what else is going on here is that TLT, or bonds in general, are falling away from a 50% retracement short. So gold is outperforming the bond market right now. And when, gold is the ultimate store of value. When this ratio is falling, it means gold is outperforming money. The bond market is falling as a store of wealth. Dollars are buying less over time. And so what we're anticipating here is that we're going into an inflationary bust. And it's kind of like, when's the next shoe drop, right? And we continue to go in this direction here. What we're anticipating over the next coming days, if this gold rally continues, is that we're going to go into the inflationary part of this direction of this, where the sell-off was actually going on inside of the indices. And I'll show you where that was inside of our price action. And this was going into the end of February, the beginning of March. And we get sold off for about a month and a half, 6 weeks. That is not happening right now on the indices in nominal terms. In nominal terms, what I mean by that is in US dollars, that's not happening right now. But in real terms, it certainly is. In real terms, the S&P 500 right now is running right back up into a 50% retracement short that we had from August of 2025, highs to lows. And what we're anticipating here is that we roll over from those levels. And so it might not be an indice short right now, or even a VIX volatility long, but it is a potential gold long as we move forward here. And that's what we're watching very closely. You can see the Dow declining from the top of a range from August to summertime 2025, highs to lows. Bitcoin is inside of a halfway back short for the year, not only in US dollars, but also priced in gold, failing to break out of. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.